The Federal Reserve announces its decision on interest rates on Wednesday at 7 p.m. UK time. While it's widely expected to raise rates a further quarter point, strategists are trying to work out how many more rate rises are to come in the current cycle. Josh joins us now with some more, and I think this is probably the big thing going into 2019, especially with the pressure being brought to bear upon the Fed by Donald Trump with his tweets about the fact that he doesn't want any more interest rate rises to come. But I can't seriously think the Fed's really paying much attention to tweet from Trump.
Yeah, I think that's a crucial thing, right? So they obviously have to be seen to be independent. So I think that it's almost counterproductive, Donald Trump raising the idea that they should stop raising rates. That being said, we have been hearing from Powell recently about the idea that, okay, we could likely get another rate rise in December, but maybe through 2019 we're going to see that ease off somewhat. Market expectations are for a rate rise. Nevertheless, that has been easing back a little bit. And certainly if you look at the last time that we saw a dot plot, that was in September, we saw 75% of the committee pointing towards a rate rise in December. So certainly for me, I do think that we're likely to see a rate rise, and the fact that we have seen this tweet from Donald Trump probably makes it more likely. But I think, coming back to that dot plot idea, that dot plot that we saw in September when we were talking about going forward into 2019, in actual fact, even the members themselves were very much indecisive. We saw a split of 4 members across 3 different options. That is 2 rate rises, 3 rate rises and 4 rate rises for 2019. So certainly if we get some clarity over exactly where the sort of bulk of the consensus is right now in terms of 2019 expectations, I think that really is going to shape this meeting more than anything. So certainly for me, when we're talking about trading this, I think the key thing is going to be what's that dot plot looking like. That's going to give us a lead for 2019. And certainly with the fact that since that September meeting where the last dot plot came out, we have been hearing some tones about them potentially slowing down. We're also hearing people saying that we could see some sort of recession looming in the distance. So certainly we could see them pull back a little bit. That would be seen as, I guess, stimulus in some sense, more sort of dovish outlook. So, that would have repercussions in terms of the stock market and certainly in terms of the currency markets as well.
And of course, when looking at the implications for whatever the Fed does, there's a lot of markets to consider. And indeed, I know that some parts of the US yield curve have started to invert, indicating potentially some sort of a slowdown, possible recession in years to come. But amongst all of the possible trades, what would be your trade to follow when the Fed comes through with that announcement?
So the one thing that I generally look for when we're talking about sort of economic data and things like that is I'll look towards the FX markets before I start looking at the stock markets. Now, certainly with the dollar, I think this is a particularly interesting one actually, because this weekly time frame highlights this trendline resistance that has been playing out, and you can see more recently we've once again touched that and started selling off from it. So we've got an absolutely critical sort of boundary we need to break through. Now, if we were to see this dot plot change in a little bit more of a, I guess, hawkish stance, i.e. less rate rises than was previously expected, and we shifted that consensus more towards your 1 or 2 rate rises and away from your 3 and 4s, that would likely move the US dollar lower. So bearing in mind that we have seen this rally into this trendline resistance, touched it on 2 occasions and now selling off, there is the possibility for us to set ourselves up for a break towards the downside. We look on the 4-hour chart and we can see that the most significant support level to be looking out for here is 95.82. So for me, I'll be looking for this announcement to potentially see a break of the US dollar below that 95. Let me just get it back onto here, 95.82 mark. And if we break that level, it's quite likely that the weakness that we're going to see at minimum is going to be a retracement of this wider move that we have from the lows back here, which is at 93.36. So if you draw that up here, you can see this sort of area of support between the 76.4 and the 61.8 is where I'd be targeting. So 94.83, 94.27. That kind of zone comes into play if we break the 95.82. So of course, it's more of a case of waiting to see if that level breaks and then being able to utilize that potential break below 95.82 to set us up for a more protracted period of downside and playing on an intraday basis.
Okay, Josh, all right, thanks very much indeed with a trade idea around that interest rate decision from the Fed. Do join us at 6:45 p.m. on Wednesday evening on MyIG on the IG trading platform. Guests include Guy Miller from Zurich Financial, David Song from DailyFX and IG Chief Market Analyst Chris Beauchamp. If you want to drop anyone on the panel a question, please use the Slido app and enter the question you have. We'll cover as many questions as we can. Just download that app and enter the event code DEC-FOMC. So join us at 6:45 p.m. UK time as we take into account that interest rate decision from the Fed at the top of the hour with some analysis after the event.